Now, our first keynote speaker has come from Frankfurt from Union Investment. The title of his talk is Driving Net Zero Through Climate Engagements. And it is Johannes, Senior ESG Analyst. So please welcome him. And also, he's going to take questions. So it's the first keynote. It is after lunch, but that's no time to have a little lull in your energy levels. So we very much look forward to this. Thank you, Johannes.
Thank you very much. Well, thank you very much. And first of all, thank you very much for having me today. It is my pleasure, and I am very keen to share with you what our company, Union Investment, is doing against the theme of climate. Some of you have already mentioned climate as one of the key themes of our time, next to biodiversity and nature capital related issues as well. So I want to share with you today what we are doing in this field as part of our sustainable investment strategy. So our company had joined the Net Zero Asset Managers Alliance back in 2021. And when we at the time had first given thought to how to structure our climate strategy, we had given thought to 4 guiding principles. So first of all, we gave a lot of thought to how to build a robust methodology that ensures continuity and stability. We also gave a lot of thought to how to have real-world impact in terms of real economic and ecological impact. We also thought a lot about applicability in terms of making a climate strategy that's relevant for all of our asset classes. And last but certainly not least, we also thought about suitability in terms of retaining those degrees of freedom that are needed to manage and steer portfolios effectively and to fulfill client demand. So at the time, we had opted for the so-called Net Zero Investment Framework, in short, NZIF, and some of you will be familiar with this particular framework. And this framework allows to group the companies that we invest in into 5 categories based on 6 KPIs. So for example, if a company sets itself a net zero target, including scope 1, 2, and 3 emissions until 2050, then it would fall into the second bracket, second category depicted here as commitment to aligning. If that company on top of that then also fulfills additional requirements, such as setting itself intermediate targets or disclosing, or actually in this case, and disclosing adequately on its carbon emissions, then it would fall into the next higher category depicted here as aligning towards a net zero pathway, and so on and so forth. So as we move further to the right, the categories become more stringent, and ideally, if a company is making good progress, it's on a good path in terms of its climate commitments, it's on a trajectory to become net zero, then it would fall into the most right category, so achieving net zero. And so what we would like to do is to push companies from one category to the next category in a certain time span, so along certain intervals of 5 years. So for example, what you can see here is that the next threshold to the next interval for our company is at 2025. And so what we want to achieve until 2025 is that the companies that we look at move from category 1, which is not aligned to net zero at all, to the next higher category, so commitment to aligning to net zero. Remember, commitment to aligning to net zero, that means all companies must have a net zero target, including scope 1, 2, and 3, until 2050. So we want all companies to have that by 2025. And as we move further down the line, so by 2030, 2035, and so on and so forth, we want companies to move into the next categories. And ideally, by 2045, we have all companies in the highest category, so achieving net zero. And the idea is then, of course, that if we are able to push companies to decarbonize their business models, that of course helps ourselves as well in terms of fulfilling our commitments against the Net Zero Asset Managers Alliance. Hence, we want all of our portfolios to be net zero by 2050 as well. And subsequently, what we want to do is to expand this particular climate strategy to all of the asset classes that we invest in. So right now, our climate strategy covers our liquid stocks and bonds portfolio, but we are already in the midst of expanding our climate strategy, and we're giving a lot of thought to how to expand it to illiquid assets. So right now, giving a lot of thought to our real estate investment funds, for example. So to make this a little bit more tangible, I would like to share a couple more details on how we go about implementing this particular climate strategy. And when you think about how to reduce the carbon footprint in your portfolios, you would typically start by analyzing where the bulk of your emissions lie. And interestingly, what we had found is that we cover 75% of our carbon emissions with only roughly 50 emitters of carbon emissions, so with roughly 50 companies. And so obviously, this is where you have most leverage, or where we have most leverage to quickly come to results and to bring down our carbon emissions in the first moment. So this is really, let's say, the lower hanging fruit, and this is basically where we start. And so what we do is, once the most important companies to bringing down your carbon emissions have been identified, these companies undergo a yearly engagement cycle, in the process of which we make sure that our calls for action are being heard. And we subsequently assess whether or not we feel that companies are really making enough progress and whether or not they are moving down the carbon emission reduction trajectory. So we have been engaging with these companies for the past two to 3 years or so. And in 2025, remember 2025, that's for us the next threshold, we'll then come to a final evaluation on whether or not companies have made enough progress. So in this particular case, that means that, again, we want companies to at least have set themselves a commitment, so net zero target until 2050, including scope 1, 2, and 3. And if companies have not sufficiently moved in that direction, then we will exclude them from our investment portfolio. Why would we exclude them? Well, we need companies to move down the carbon decarbonization trajectory in order to fulfill our own commitments. But until then, we have a range of engagement tools that we can use to really exert pressure on the companies that we invest in. So something that's part of our daily bread and butter anyways is speaking to our investee companies. So we're engaging with them anyhow on a regular basis. But what we're also doing is to band together with like-minded investors and do collaborative engagements and really push them in the right direction. So we have been doing that for the past couple of years. We're doing that anyways on a rolling basis. More recently, so since the start of this year, we have decided, or our plan foresees, that we use our proxy voting and AGM-related activities and the power that we can really have here to further push companies. So as part, again, of proxy voting, but we're also in the public media, making our voices heard, and so on and so forth. And I can tell you from my experience that that really has an effect. Companies will really, call you and talk to you about what we can do, what they can do to make the next steps. If all else fails, and as I had already alluded to, then we will also divest if we really feel that companies are not making enough progress or don't want to make progress in terms of their climate transition. So that's roughly the tools that we have at hand. Now, that of course begs the question, are our calls for action really realistic? Do we have a fair chance that companies will actually move in the right direction? And we have been doing this particular analysis for quite some time. We're doing this continually. And when you go back in time, actually exactly 4 years back, then what we had found at the time is that the roughly 50 companies that we had been looking at only very few had set themselves a full net zero target, so including scope 1, 2, and 3 emissions. A few others had partial targets that could have meant that scope 3 was missing, for example. But the bulk really did not have any net zero target. That's just 4 years ago. You had mentioned how much has changed in recent years. And now fast forward 4 years, and this picture has changed markedly. So interestingly, what we see today is that most of the companies that we had engaged with as part of our climate strategy have now set themselves a net zero target, including scope 1, 2, and 3 emissions until 2050. There's another group of companies that are on the verge of setting themselves full targets, or they're still in the process of doing so. And only very few remain today with no net zero target at all. As a matter of truth, I have to concede that we have seen 1 or 2 companies unfortunately roll back their targets. That's part of the uncomfortable truth as well. But overall, what we see is that there is a strong momentum in companies adopting net zero targets and embarking on the decarbonization journey. And so we feel quite confident that until 2025, we'll see most companies moving into the full target category, with only very few remaining in the partial or no target group. And again, we will come to an assessment how we go about these companies. But again, if companies do not move at all, then we see no fit in our company for these investment targets for us. So to make this a little bit more tangible, I have brought along one example, namely Covestro. Many of you will at least have heard the name Covestro before. It's a chemicals company that we had identified as being one of the higher emitting companies in our investment portfolio. And we had been talking to this particular company continually. And when we had met the CEO of this company back in February, I think 2023, so still last year, I can recall that the CEO had told us that even though they had set themselves net zero targets until 2050, including scope 1 and 2, scope 3 would be missing from this equation. The company would not set itself a net zero target, including scope 3. So we kept engaging this particular company on that. I am pretty sure that there's a lot of other like-minded investors that have also engaged Covestro on this. And the result was that we achieved that Covestro has now set itself, actually just recently, a couple of months back, a full target, so net zero, including all scopes 1 until 3, 1, 2, and 3. Covestro is reporting to us that they're now also engaging with their supply chain, so pushing their own suppliers to also become carbon neutral, which of course means reducing scope 3 carbon emissions. So that is a positive examples, and we have a lot of these. We have seen a lot of these examples recently. So that's the very good news. Companies are really moving in the right direction, we feel. So this is largely what I had to share in terms of our climate strategy. But there is another very, very pressing issue, namely everything surrounding nature capital and biodiversity. And this slide, I don't want to go too much into detail, but it's merely to show that what we are doing in terms of our climate strategy and climate engagement, we are already in the midst of doing the same thing for the topic of biodiversity being a very important topic as well. So here we have just recently published a biodiversity policy, which you can find on our website. But importantly, we are already in the midst of the doing rather than the talking. So this is, I think, something to take away and keep in our minds as well. So to sum this up, and then I'm very, very happy to discuss all of your questions. we see and we have the experience that investors clearly have a role to play in pushing companies in the right direction in terms of their climate transition. We implement this in very close collaboration with our clients and as part of our portfolio management team. We continually develop, of course, as ESG keeps evolving around the most important building blocks of sustainable investment, so climate and biodiversity in the more recent years. But who knows what will come next? So we continue to substantially evolve our process. So with that, I would like to close. Thank you very much for your attention and very happy to go into all of your questions.
Thank you so much. I'm going to get a microphone for questions because this is being recorded and therefore they can hold. We have a question right here. If you could introduce who you are, where you're from, and keep the questions concise. Thank you.
Can you hear me? Yes. Alan Derigoyen from 80 Green Capital. How do you, what are your commitments to your own investors with respect to that? To net zero, I mean.
Can you specify your question? So our investors are our retail clients as well as institutional clients.
Yes, what I mean is you're showing all the progress that you're monitoring with it, the great progress that you're monitoring with the companies. How do you communicate that back to your own investors?
Right. You need to differentiate, of course, between the retail side and the institutional side. On the retail side, we have we publish a lot of news flow articles, blog articles, LinkedIn, stuff like that. So that's all publicly available, and our retail clients can take a look at that at any time. For institutional clients, I would say the picture is a little bit more nuanced, and the requirements that we receive from our institutional clients are a little bit more sophisticated. Institutional clients, the way I see it, there's also a range of what they opt for. For some institutional clients, ESG and climate consideration play a little bit less of a role than for others. But what we have is we have the full capacity to report on everything we do in terms of climate. So, for example, we have a proprietary sustainability software that all of our sustainable portfolio managers are obliged to use in terms of steering their portfolios. It's called Series. And whenever we talk to any particular company, we make a little post in that platform. So whenever another colleague picks up the dialogue, the person can pick up where another person has left off. So we can monitor and track the progress we are having. And this we can very easily, just with a couple of clicks, basically report to our institutional clients as well. So that's roughly what we do. Does that help? Is that, yeah?
Yeah, hi. Lotte Beck from Macquarie. I was wondering if you're referring, I'm over here, sorry.
Over here.
If you're referring to standards like the SBTI in your assessment, or if you have your own framework, and if you do, how do you ensure that the roadmaps that the companies publish are realistic?
Right. So SBTI is certainly one indicator that we look at. But when you work in the field, you come to realize that net zero doesn't mean net zero. Companies will, report differently on their emissions, and there's always a lot of nuances. So, sorry, I totally forgot what I was going to answer. Can you repeat your question quickly?
No, okay. Yeah, so the first part of the question was whether or not you use tools like the SBTI, or if you don't, if you have your own framework, then how you ensure that the roadmaps are realistic.
Apologies, I was going off on a tangent, so kind of forgot where I was going. But so having SBTI and looking at certain metrics is good. But what I wanted to get at is that you will only really get a sense of whether or not a company really is going into the right direction by talking to the company. And this is the kind of possibility we have. we are in the very privileged situation that we are on the buy side of the market. The CEOs and CFOs of this world come to our house and they want to sell us their stocks and bonds. Again, that's a very privileged situation. And I can tell you from my own experience, they are extremely good at selling. So it is my role to really dig beneath the surface and to get an understanding of whether or not the company or the person that I'm talking to is really sincere about the commitments the company has made. So we look at a lot of indicators. We look at, has the company set itself a net zero target, yes or no? And again, as I was mentioning, it's really all about the details here. But then as part of the process, we talk to the CEOs and CFOs of this world, so the C-suite, and really get a sense of, is the company really ambitious, and does it really want to go down that trajectory? Does that answer your question? Wonderful.
We have another question.
There was another question
here
over
at the back. If you, then I can see where the questions are, or at least until I've, okay, after this one.
Hi, thanks for your great presentation here. I'm Claudia Dambax from Impact, a fund manager, and AFM here in Luxembourg, dedicated for sustainability and impact finance space. I really liked your pathway towards, your critical, you as a union investment being critical investor. Can you remind us what stake do you usually take in the companies? Means always majority stake in your portfolio companies, and towards this pathway. So you said this critical interview, and if needed, you're even at the AGM and do a critical speech. How much percentage you think you had to go already all the way to the AGMs and have a critical speech? And can you share maybe some examples here? Because I think what you're saying here, not only on investor level, on your investors, but on your investee level, basically you're really influencing the full world, and how much you think you made your investee companies really move than what you showed on the screen, from 2010 to today to net zero targets.
All right, so on your first question, we are mainly an investor that invests in liquid instruments. So stocks and bonds that are publicly traded are basically our bread and butter. We also have illiquid assets, as I mentioned, but that's really the most important part, and this is also where we start. So with that in mind, our ownership of companies that we invest in ranges from, say, 0.1% to, in some cases, maybe 4 or 5%. Not so much, but certainly more than just one person will hold in stocks. I would say that's mostly at least the case. But nevertheless, we're a big house. We have a whole range of things that we can do to interact with the company. So I myself, I'm analyst for financials. I've been talking to some of the European banks. Whenever we publish an article in the German FT, so Handelsblatt, for example, and we're more critical about certain aspects, then you can be pretty sure that half an hour later the phone will ring and they will pick up the conversation. So we have those tools. And in terms of your second questions on how many of the AGMs are we active, it kind of depends. I mean, you could be theoretically on hundreds of AGMs voting on thousands of items. That's simply not feasible. But we will be on those AGMs where it is critical. You shouldn't forget, of course, that we also have a fiduciary duty. That means we need to make performance for our clients. So, we will be there whenever we feel we have a contribution to make in terms of the fundamentals, as well as sustainability aspects. Now, regarding your third question, what is our contribution? That's a little bit more tricky. So I would say our impact on the public side is a little bit more difficult to measure because it's more indirect. But what I can tell you is that I've had the experience that people from the corporate side, so again, usually the C-suite, they will approach us, and I even had the situation, look, hopefully you will vote in our favor. What do we need to do in order, or what changes do we need to do in our company to be in your favor, so to speak? So we have that kind of power. Now, I think it's not possible to say that we had a corporate dialogue on the 15th of September, and therefore company Covestro the next day changed this and that. That's kind of hard to prove. But what we're clearly seeing is that jointly with other like-minded investors, we have that possibility to really exert pressure and push companies in the right direction.
We have 2 questions on this row. So first.
Right, very quick one. Hello, everyone. I'm Yulia from Aztec. You were mentioning about the, extreme situation where you would have to go through divestment process. So, and consider a situation of the company then, change their situation, I don't know, they changed their mindset and they decided actually to implement all of those things that you were pushing in since the very beginning. Would you still consider them, let's say, on the next round in the future, potentially? Or you completely consider this to be, I don't know, trust being broken and there is no path on the way back?
Right, so if a company rolls back on its climate commitments, or it never passed any kind of net zero target in the first place, then it does not have a place in our investment portfolio in terms of our net zero ambition, our net zero strategy, our climate strategy. Having said that, there can be, or very few exceptions are thinkable. So for example, imagine the entire political landscape changes, if entire countries, and that's actually not so unrealistic, like the USA, withdraw from Paris agreements and so on and so forth, and companies are perhaps from a regulatory perspective obliged to roll back. That's one of the situations when we would say we would check whether or not an exception is okay for us. But that would be really the exception. So that's the long answer. The short answer is no.
And final question.
Okay. Yes, thank you. Great presentation. I have a question based on that. So how are you tackling hard-to-abate sectors based on active engagement, so divestment, inevitably? And if you think that it's possible to do active engagement to divest in these sectors unless they have a credible transition path?
So the idea is not to divest from hard-to-abate sectors, because hard to abate means it's hard to abate, but it's not impossible to abate. And so we believe there is no, positive impact by merely selling certain stocks and bonds, because what happens? That these stocks will, in all likeliness, change hands to a less stringent investors, and they can just, keep doing what they do elsewhere. So we want to avoid that. We want to stay invested, and we want to see whether or not companies are really moving in the right direction in terms of having a credible and ambitious transition strategy. And so that's what we look at. That's what we talk to companies about.
Thank you so much to Johannes. Thank you for taking all of those questions as well. Thank you.
Thank you. Thank you.